What are the top 8 safest banks for your money in the U.S. in 2026? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. So, when I first started in finance, one of the most common phrases I used to hear was, given the current economic uncertainty and market volatility. Well, fast forward to nearly 30 years later, and not much has changed. It seems economic uncertainty and market volatility are still buzzwords in every financial report, forecast, etc. That said, there are still specific actions that we can take as savers and investors to keep our money as safe and protected as possible, regardless of the craziness that may or may not be going on around us. So, with that in mind, this is our annual update of the 8 safest banks in the U.S. in 2026. Here are the 3 topics that we'll be covering today. 1. How has our personal list of the top 8 safest banks in the U.S. changed this year? This section of our video should be of particular interest to those of you in our community who do business with Merrill Edge and E-Trade. 2. Which other global institutions make our list of the safest banks? And 3. What do the latest bank failure numbers tell us? Let's dive in now, folks. How has our personal list of the top 8 safest banks in the U.S. changed this year? Many of our Diamond NestEgg regulars have heard me say this before. These are 5 of the most important indicators used in the industry to determine the health of a bank. First is profitability, how much money a bank makes, and how large are factors like the net interest margin, or NIM. The NIM is the difference between what the bank pays its depositors and what it charges its loan customers. Second is provisions for loan and other potential losses. For example, how much the bank has already set aside to cover likely future losses on its loans, because not all borrowers will pay back 100% of what they initially borrowed. Third is capital and liquidity as a percentage of the balance sheet, meaning how much money is available to cover any additional losses from bad loans or other misadventures a bank may experience, and that are not already covered by loan loss provisions or similar reserves. It also includes how much money is readily available in liquid cash. Fourth is any unrealized losses, for example, on held-to-maturity securities, which is the loss that a bank would incur if it had to sell its treasury and other debt securities before maturity, say because depositors are withdrawing money at a faster rate than the bank has liquid cash for. Note that in good years, a bank may also have unrealized gains as an additional reserve. And fifth is the bank's credit rating by independent agencies such as Moody's, Standard & Poor's, and Fitch. Now, all these factors are informative and used often in the industry to assess a bank's health. We use them here at Diamond NestEgg as well. But when it comes to bank safety, these numbers alone don't necessarily tell the full story, because they're often more historical and backward-looking, and as such may be less helpful when you want to predict what will happen in the future. In our mind, what ultimately makes your money and my money safe is government backing. And this government backing comes in 2 forms. The first and probably most well-known is FDIC insurance, which nearly all banks have to have by law. FDIC insurance covers up to $250,000 per depositor per insured bank for each account ownership category. The second form of government backing, and one that is often less well known unless you're a Diamond NestEgg regular and already watched our previous videos on the topic, is GSIB status. GSIBs are global systemically important banks. In layman's terms, these are the banks in our country that are too big to fail. The government will do everything they can for as long as they can to keep them from going under. The reason being that one of these banks failing may draw the entire banking system into the next global financial crisis, and the real economy with it. And no one really wants that. In our mind, GSIBs are the banks that have the most government backing, and that is where their safety comes from. Because even when a GSIB collapses, the government will most likely step in and do whatever they can to save it. And that is why our personal list of the top 8 safest banks in the U.S. comes from this list of global systemically important banks, all of which have more government backing than just FDIC insurance. GSIBs are subject to stricter regulation. For example, they're required to have more capital and liquidity on hand than non-GSIBs. GSIBs are also subject to higher supervisory expectations, such as how they manage risk, governance, and internal controls. And risk management, governance, and internal controlling in the current market environment remain as important as ever, given the uncertainties around inflation, interest rate, trade, and tariffs, to name just a few. This list of global systemically important banks is provided by the Financial Stability Board, and they're ranked according to buckets. The higher the bucket, the more globally relevant a bank is, and the more capital it needs to have on its balance sheet. And this list, it is updated annually, but usually there aren't big changes, unless there's that rare occasion, as with Credit Suisse and UBS in early 2023, where GSIB gets into a merger or acquisition scenario. The case of Credit Suisse was a case in point, by the way, that governments will do what they can to avoid a GSIB failing. That's why Credit Suisse was ultimately merged into UBS, and no saver, no depositor lost a single cent. In any case, with no such merger or rescue required in 2025, our personal list of the top 8 safest banks in the US has not changed significantly either since last year. And when you think about it, the stability is really reassuring, because who would want to have a new list of GSIBs every year? That said, while there weren't any big changes over the past year to the GSIB list, there were some minor ones. So let's see what those were. So, in bucket 4 at the very top is a GSIB that holds the most additional capital in percentage terms in its coffer, meaning it should be most able to digest and manage financial losses and external shocks. Bucket 4 needs to hold an extra 2.5% of capital above and beyond what other non-GSIBs are required to hold. And in this bucket, there's only one bank across the globe, just like in previous years, and it's JP Morgan Chase. In bucket 3, with an extra 2% of capital, we have 2 GSIBs this year, and ranked just alphabetically, that's Bank of America and Citigroup. Citigroup was in bucket 3 last year as well, but Bank of America just moved up into this bucket. It was in bucket 3 for a number of years, but was knocked down briefly to bucket 2 last year. Bucket 2 needs to hold an extra 1.5% of capital, and we have only one GSIB this year, Goldman Sachs. And in bucket 1, with an extra 1% of capital, we have, again, in alphabetical order, Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo. Do note that there is, in theory, a bucket 5 at the very, very top with additional capital requirements of 3.5%. But bucket 5 is empty and has been empty for quite some time now. So, for those of you who've asked us about how Merrill Edge and E-Trade are doing, you should know that Merrill Edge is owned by Bank of America here, and E-Trade is owned by Morgan Stanley here. Now, never say never, but the way we see it, if the government will step in and do whatever they can to save a GSIB, this implicit backing for Bank of America should also protect Merrill Edge under its umbrella if worse ever came to worst. And the same principle means that Morgan Stanley's ownership should also provide E-Trade customers with the same implicit government backing. Because keep in mind, all these GSIBs have multiple lines of business that contribute to their bottom line, meaning that Merrill Edge is just one part of Bank of America's larger business, and E-Trade is just one part of Morgan Stanley's larger business. So, if Merrill Edge or E-Trade were to ever get into a temporary financial slump, their parent companies, these 2 GSIBs here, with their deeper pockets, would presumably be there to support them in a way that would not be possible if Merrill Edge or E-Trade were just standalone entities like Fidelity, Vanguard, and Schwab. And of course, it helps even more that in this case, both Bank of America and Morgan Stanley should both benefit from their status as GSIBs. If you want a deeper dive into these bucket calculations, I've included the Financial Stability Board's link to this most recent list of global systemically important banks in the description below. So, to summarize, in the current environment, we continue to think that bigger is better, at least for banks. Because these 8 GSIBs have more resources, more risk managers, more experience, and more capital to weather whatever storms may lie ahead. and they also have more regulators looking over their shoulder to make sure that they are handling our money properly. Not to mention the implicit government backing, of course. Now that you know our personal list of the top 8 safest banks in the US, let's move on to the next section of today's discussion. Which other global institutions make our list of the safest banks? So, you should know that this full list of global systemically important banks includes not only American banks, but also European and Asian banks, some of which have a not insignificant presence in the US. Let's quickly go through what these other safest banks are, because I know that some of you in our Diamond NestEgg community have asked about them. Here is the full list of the safest banks, or GSIBs, in the world at the time of this taping, organized by bucket, percentage of additional capital required, and bank name, as before. Again, bucket 5 with additional capital requirements of 3.5% is empty, even when we expand our list globally. So let's start with bucket 4 with an extra 2.5% of capital. And here, also again, as we mentioned earlier, we have just JP Morgan Chase. In bucket 3 with an extra 2% of capital, we have 2 more banks than last year, for a total of 4 now in this bucket. And they are Bank of America, Citigroup, HSBC, and the Industrial and Commercial Bank of China, ranked alphabetically as in the earlier table with just the top 8 safest banks in the US. In bucket 2, with an extra 1.5% of capital, we have quite a few European and Asian banks, in addition to American-based Goldman Sachs, including Agricultural Bank of China, Bank of China, Barclays, BNP Paribas, China Construction Bank, Crédit Agricole, Mitsubishi UFJ, and UBS. And the one change here from last year is that Deutsche Bank has been moved down to bucket 1. With an extra 1% of capital. Here, there are also quite a number of European and Asian banks, alongside Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo, including Bank of Communications, Deutsche Bank, as I just mentioned, Gruppe BPCE, ING, Mizuho, Royal Bank of Canada, Santander, SocGen, Standard Chartered, Sumitomo Mitsui, and Toronto Dominion. So, curious minds want to know, do you keep your hard-earned money with any of these banks here? If not, who are you with and why? What do you love about your bank? Drop a comment below and let everyone know. Or perhaps you're with a credit union, because while the GSIBs here take pole position in terms of safety, in our opinion, they can sometimes be lacking in other areas. Customer service and that extra personal touch, for example, come to mind. And if credit unions are indeed more your cup of tea, check out this recent video from Your Financial Journey, where Ava walks through the top 10 credit unions in the US. In any case, now that we've covered our personal list of the 8 safest banks in the US, as well as some of the safest banks across the globe, let's talk about something on the opposite end of the bank safety spectrum. What do the latest bank failure numbers tell us? So, the good news is that the latest bank failure numbers paint quite a nice picture overall since 2024, up to the time of this taping. If we look at the FDIC bank failure in brief summary, let's scroll down a bit. This was what 2023 looked like. This is what 2024 looked like. And this is what 2025 looked like. Hopefully, 2026 will be similar. The blue bars show the total assets in millions of the failed banks for a particular year, and the red bars show the total number of bank failures. Last year, there were only 2 bank failures in the U.S., the Santa Ana National Bank in Santa Ana, Texas, with $63.8 million in assets and $53.8 million in deposits, and Pulaski Savings Bank in Chicago, Illinois, with $49.5 million in assets and $42.7 million in deposits. So, both quite small by banking standards. As you can see, when you compare these numbers to 2023, which saw some more substantial bank failures in the U.S. with Silicon Valley Bank, First Republic, and others. Hopefully, things will stay relatively peaceful in 2026 as well, despite the ongoing economic uncertainty and market volatility that some are expecting this year. But as always, we'll keep you posted if things change or take a turn for the worse. All right, Diamond NestEgg members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And as always, if you're interested in continuing the conversations with me, Marcus, and our Diamond NestEgg VIP members on bonds, preferred shares, and other safe ways to generate additional income this year, I'd like to invite you to come join our private VIP investment club. Remember, our Diamond NestEgg VIP investment club is the ideal place for you if you want to 1. Have an extra pair of eyes for critical investing questions. 2. Get ready for the retirement decisions that lie ahead for yourself or loved one. 3. Understand how a product works, its benefits, and its risks. 4. Be the first to know about safe and or higher yielding investments. 5. Spot and clearly understand new market trends and issues. 6. Exchange perspectives with a like-minded community. And or 7. Continue your lifelong learning about investing and retirement. If you fall into one, some, or all of these categories, visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more. And see you again very soon with more brand new wealth building content for your financial journey.